A hotel project can look exciting on paper. A strong location, a good-looking concept, and the ambition to create a successful hospitality asset often give investors the confidence to move quickly. But in hotel development, speed without validation can become one of the most expensive mistakes. Before land is finalized, before design progresses too far, and certainly before major capital is committed, there is one step that can determine whether the project moves toward long-term profitability or long-term struggle. That step is the feasibility study. A feasibility study is not just another report prepared for documentation, it is the foundation of informed hotel development. It tests whether the proposed project makes commercial, financial, and operational sense in the real market. It helps investors move from assumption to evidence. Many projects begin with confidence, but confidence alone does not confirm market demand, sustainable room rates, achievable occupancy, or realistic returns. A proper feasibility study brings these questions into focus before the cost of being wrong becomes too high. One of the biggest reasons this step is so critical is because hotel development is not only about building a property, it is about building a business. A hotel may be physically impressive and still perform poorly if it is developed for the wrong market, the wrong guest profile, or the wrong price point. A feasibility study evaluates the demand drivers around the location, studies existing and upcoming competitors, reviews market segmentation, and identifies whether the proposed hotel concept is actually viable. This early clarity helps prevent a mismatch between investor vision and market reality. Without feasibility analysis, many developers rely on instinct, surface-level assumptions, or comparisons that are incomplete. They may assume that a growing area automatically needs a hotel, that a premium product will attract premium demand, or that location alone will guarantee success. In reality, hotel performance depends on many variables working together. Demand patterns, seasonality, accessibility, competition, positioning, and operating cost all influence viability. A feasibility study connects these variables and gives the investor a grounded picture of what the market can realistically support. Another reason feasibility is so important is financial discipline. Hotel projects require substantial capital, and the financial impact of a wrong decision is rarely limited to construction cost alone. Errors at the feasibility stage can affect room count, positioning, facility mix, operating model, staffing burden, and revenue potential for years after opening. A proper study helps estimate achievable occupancy, average daily rate, revenue mix, and probable returns. It also highlights risks, exposes unrealistic expectations, and supports better financial planning. Instead of pursuing numbers based on optimism, the investor gets a practical basis for investment decisions. Feasibility also protects the project from costly development mistakes. It can reveal whether the market is already oversupplied, whether the destination lacks sufficient demand drivers, whether the land has constraints that affect efficiency, or whether the concept needs to be resized or repositioned. This is where true value is created. The goal of a feasibility study is not merely to approve a project. Sometimes its greatest value lies in challenging the original idea, refining the concept, or even advising against development in its current form. That kind of insight can save enormous capital and protect long-term investor confidence. For lenders, partners, and serious stakeholders, feasibility analysis also builds credibility. A project backed by data is easier to evaluate, easier to support, and easier to finance. It demonstrates that the development is being approached with strategic discipline rather than emotion. In hospitality, where so many variables affect performance, this level of preparation is not a luxury, it is a necessity. Most importantly, a feasibility study helps shape a smarter project from the beginning. It influences the right product type, the right scale, the right positioning, and the right commercial approach. It helps align the design and development process with realistic business outcomes. That means the hotel is not just being built to look good, but to work well, operate efficiently, and generate sustainable returns. So, is a feasibility study the most critical step in hotel development? In many cases, yes. Because before architecture, before construction, and before launch, there must be clarity. A hotel project succeeds not simply because it gets built, but because it is built on the right assumptions. Feasibility is where those assumptions are tested. And when this step is taken seriously, it becomes the difference between an expensive gamble and a well-planned hospitality investment.